Good evening, everybody, and welcome to this edition of Live Market Analysis. It's Monday, 18th of March. It's a pleasure to be with you as we delve into everything markets. The disclaimer before we get started says that everything we're going to discuss tonight is general advice. That means it has not taken into account your personal financial circumstances or particular needs. Hey, it's just information, isn't it? So before you act upon any of this information, please consider it carefully or seek the help of a financial professional to assess whether it's appropriate for you. Other than that, it's important to remember that investing is risky. There's a pretty good chance at some stage you're going to lose money, and if you're not responsible with your investing, you could lose lots of it. Ultimately, it's you, though, who's responsible for everything you do, and not I. With that in mind, over to the good stuff. Find the chat window in your Google Meeting window and get your requests rolling. Any chart, I'll look at you for you. I'll look at you for you, and I'm going to give you my best technical analysis ready on anything stocks related, or it could be trading related, methodology, money management, and mindset. I do have a bunch of requests that have come in offline, so I'm going to get to those first. It's important. I feel it's important that people that aren't able to make it, because I know it's a crazy late time for you on the East Coast, it's important for everybody to have a chance to get their questions answered. The good news is that won't be for much longer. I'm pretty sure it's the April the 8th where the daylight savings in various season states rolls off, and you'll be back to a 9 o'clock start my time, but obviously that will occur in due course. 9 o'clock time, 9 o'clock start your time. This is still be 7 o'clock over here in Perth, I assure you. Okay, nothing major coming through from your live one, so nothing technical in nature, so let me head over to the offline requests. Nicola, actually, not that it matters, you don't know who's who in order, but officially Craig is first with Sandfire Resources SFR, so one of the Australian copper stocks. If you've been following my updates on Market Index, I do the evening update there every day the market's open, and I do a chart watch segment as well, where I'm looking at the really interesting charts each day. And copper, I shouted that out. Oh, I don't know, maybe it was Tuesday or Wednesday last week. A big white candle. We know what that means. In fact, why am I talking about it? I might as well just show you. It's not hard to do. I'll just head over here to the trading view window, and that's where I provide access to you. So here's a community service announcement. If you haven't yet asked me for access to my Capolingua dynamic support and resistance clouds, then please send me your trading view username. You can see mine, obviously, is Carl Capolingua, but yours will be yours. Send me an email, and then I just literally jump in there and I provide you access. The reason why I'm there is because I provided Jeremy with access just before the start of this session. But where I was heading was to grab a chart. Not there. We go back to here, super charts now. And I wanted to show you a chart of copper. We will do a bit of a whip around the grounds, but there you go, there it is. So it was the big white candle that got my attention through here. Nice little breakout through 1, 2, 3 areas of historical supply. And we've hit 413, no surprise. We kind of stopped there, didn't we, last night? We're just hovering under that level. We'll see what price action we get from here. Continued white candles, hey, we could get through. All good signs. If we see an upper shadow here, black candles, then we've clearly found supply. You've heard me use that term many times. When we're in a nice uptrend, we're going up, hunky-dory, happy days, here we go, here we go, here we go. And then I say, oh, we found supply. We finally found it. And that's what those black candles are manifesting, and all those upper shadows. We could get to 433, we could get to 449. All of those things are prognostications. I don't do prognostications. I just tell you that the trends are turning in the right directions with good price action and candles, and therefore I believe exhibiting signs of excess demand at this stage. Now, it is a logical step to go from that chart back to Sandfire Resources, because it's the only real pure play copper stock left on the ASX. And some people would say, well, that makes it a takeover target. Hey, I don't know about those things, but I can tell you the trends are good here as well. So light green, dark green. I have one of two new kittens to the house tearing up my shears, which is not a good thing. So I could shout at the kitten, or I could shout at my son, who was told to make sure the kittens don't come into the office. And I think neither of those things would do me any good. So I'll keep talking to you. Where was I? Excess demand, light green, dark green, high peaks and high troughs. The only way you can get those things is if the money is piling in. And at the same time, the people who own shares in this company don't want to sell it. Why don't they want to sell it? Because copper's going up. Now, does that mean this thing's going to go up forever? No, it won't. No, eventually it'll turn. It'll show you, it'll manifest supply or excess supply, black candles, upper shadows. It'll be lower peaks, lower troughs. The trends will turn, and it'll go into probably 12 to 18th bear market. It'll be horrible. And it's done it before. But we don't have to worry about those things right now. The point I'm trying to make is nothing lasts forever. We're in this for a good time, not a long time, and it's still a good time. So there's no reason to do anything, I feel, but hold these. In fact, the last few candles are still telling me there's excess demand in the system. We've got lower or downward pointing shadows. And the only way you can get downward pointing shadows, ladies and gentlemen, is if there's you have some supply. And this is the beauty of these downward pointing shadows. This is why they're so important. And sometimes you hear some very silly things, and you might hear something in it, or read, or here it could be on YouTube, because there's lots of experts on technical analysis on YouTube, and they've been doing this technical analysis, ladies and gentlemen, for all of about 5 minutes, and that makes them absolute geniuses. But they will tell you, when you see a candle like this at the top of a trend, it could be even something like this, they will tell you, well, that's a bearish candle, because it's a hammer. Okay, and we see hammers at the top of the trends, it indicates indecision, and that's rubbish. It's crap. It indicates it anywhere you see them, top, bottom, middle, wherever, it still indicates demand. And the person who tells you it is bearish just doesn't understand. They might understand little pictures that they read in a book once or twice, but they don't understand the basics of demand and supply. The only way you can get this candle is if at some stage, don't forget, it was. Well, it opened here. I mean, the very first print, that's what the candle looks like, isn't it? It's an open, it's a print, it's a price. There's no high, there's no low, there's just an opening price. And then it starts to move around during the day. But more likely than not, what you have is you have something like this at one stage. We start pushing down. Why are we pushing down? Because we've got this excess supply in the system. People are panicking. People are getting out. They're unsure. The market's been going up gangbusters day after day after day after day after day. It's been going up and up and up. And all of a sudden there's the supply. We found the supply, and everybody starts to panic. The weak hands are panicking. The big money, the strong hands, they're not panicking. They're going, oh, finally, there's a bit of supply here for me to soak up and munch up and take, because I know this thing is worth way more than what it's trading at now. And they start to buy, and it starts to move that last price up for the day. And as that last price starts to move up, it creates that shadow, doesn't it? And then they buy some more. And probably by about here, people are starting to realise, maybe I shouldn't sell anymore. The weak hands are saying, okay, I better stop selling. And they start to hold. And in that supply vacuum, the demand has more of an impact. And up we go until we close the day, and let's pretend that it went above where I can draw it, but we end up with something like this, a pure demand side candle. That candle, ladies and gentlemen, is pure demand. It's all demand. We closed on the high of the session, telling you that there's this unquenched thirst for shares, for stock, for risk in the market, and you can't get anything more. Literally, you cannot get anything more bullish than that. The only thing that would be more bullish than that is if the candle was bigger, indicating even more demand. So it doesn't matter where you see them, they are never, ever bearish. Now, this isn't a perfect example of what I've drawn, because there's a little bit of supply, there's a little bit of profit taking coming in there. Why is that? Hey, people aren't completely sure about whether this is still a bargain. And that could concern us if that shadow grows and grows and grows. But right now, I don't think there's anything to worry about. I think it's important every now and then for us to do a little bit of this revision, let's call it, because I think we need to be reminded of just the reason why prices move. There's only one reason: the interaction between demand and supply. Let us keep moving, and we're going to go to for Nicola. We're going to Karoon. Nicola posed a question to me today, and they're always welcome. Nicola said, I've been hearing quite a bit of chatter from US traders lately. Oops, Stop listening to other traders. Please don't listen to other traders. Block your ears and just listen to the charts. About rotation from tech stocks into commodities and energy. And look, if that was happening, you'd see it in the charts. Okay, if there was anything going on, anything meaningful going on there, the demand and supply dynamics would be changing, the charts would be manifesting this. So let us stop listening to rumours and hearsay and narratives and focus simply on price action. Is this something we can... Okay, nobody's going to ask me a question now because I'm basically chastising you as I read it. Is this something we can have a look at tonight to see if we can confirm that and if the trend is more evident in the USA? Or this is a pretty wide-ranging question. But certainly what we can do is we can look at things like copper. We've looked at that, so we've kind of answered that question. We can also look at things like, let's head over to my macro. A little bit of noise in the background because one of the kittens is chasing something around. I finally caved in and got the kids a pet, and we decided on cats because I figured they were lower maintenance than a dog. And I'm sure I've got an equal number of cat people and dog people in the audience right now who are either agreeing with me or are shaking their heads from side to side. I wanted to look at some of the other base metals. Let me go zoom, normal, and we're going to go line and just have a quick look here. We're looking for how if that excess demand is coming back in. Not really, but not awful. Look, maybe it stopped going down. It's very flat, isn't it? That's aluminium. Copper we know is going up. That we saw it on COMEX, which is the US contract, and this is on the London Metals Exchange. And that's actually starting to look pretty good. I've got some more analysis on that for you in this evening's market index evening wrap. Iron ore will appear in a second because there's a little funny thing here with the percentage sign that it doesn't like. We can see obviously that one's been coming down. We know that's well documented as well. But it is coming down to the bottom of a range, and it would not surprise me at all if iron ore bounced off the bottom of that range, but we're yet to see the bounce, so let's see that happen first before we get too excited. If it closes beneath the 100, it's probably on a very, very slippery slope. But depending on the contract, I even read something about it closing below 100 today. Let us quickly have a look at nickel, which is trying to turn up. Again, will probably stop going down. Whether there's going to be this amazing V-shaped reversal, I don't know, I can't tell, but at least it stopped going down. Lead is pretty sideways. We're looking for patterns here. Is there a broad-based move in all commodities? Tin's turning up. I think that looks really good. Two tin stocks, Venture Minerals and MLX is one I've been asked to look at tonight. We might look at both of them. They're very, very small. Zinc probably stop going down. So we've either got a situation where actually some of them are going up, the tide has turned, and we are seeing excess demand, and the other ones have probably stopped going down. That doesn't mean they're about to rally, but they've at least probably stopped going down. So maybe your US traders are onto something, and it's very early stages. I'm also seeing energy commodities start to look pretty good. I've overstated that. Start to look interesting. I wouldn't say pretty good just yet. But crude oil, it's looking warm, isn't it? A version of warm. Definitely not hot, but there's a little bit of a short-term uptrend. We're back above the long-term trend ribbon. That long-term trend ribbon has gone from providing dynamic sort of resistance through here to a little bit of support, a bit more support here. The price action's a bit sketchy. I'm not over the moon excited about that, but look, it's starting to look a bit better. If we look across the broader energy spectrum there, what's the word I'm looking for? It escapes me. It's a group of commodities spectrum. It'll come to me. And that actually looks really interesting, which is bad. It's bad for stocks if this is going up. So I'm not sure if you looked up the top here, but that's RBOB gasoline, and that's literally the gas that Americans put in their car. And obviously, as it's a seasonal thing as well, this is a seasonally strong time of the year because we're starting to position ourselves ahead of our summer driving season, aren't we? But that obviously will have a flow through to inflation as well, and that's a pretty interesting chart. The price action there much better. Then crude oil, heating oil not as good because we're coming out of winter, we're heading into summer. Natural gas is doing nothing. So we've looked at a few energy commodities there. Should we look at some moly? I promise you I haven't looked at agricultural commodities since I was working for a broker that offered those products and they wanted me to do it. But that is one hell of a chart there on cocoa, ladies and gentlemen. Have you been following these? If you haven't been following these, why not? What else we got here? This is cotton, no dice. Coffee, no dice. It's just cocoa. How about that? Chocolate. I feel like a piece of dark chocolate at the moment. Robusta coffee looks pretty good there, and that's sugar. So cocoa but not sugar. Cocoa but not coffee. I'm not going to look at the other ones. Oh, okay, very quickly. Oh, that looks pretty horrible. That's corn, but a little bit of a bounce there. Oats, rice, potentially breaking down. Soybeans and wheat. Big downtrend. Big downtrend on wheat. Okay, probably good for inflation, just like gasoline's bad for inflation. Interesting. What else can we do while we're here? Uranium, probably worth mentioning just in our whip around, if only to ward off any questions later on. A little bit of a bounce here. Hey, guess where it bounced from? You wouldn't believe it. The long-term trend ribbon. How about that? Offering dynamic support on the way up. Who would have thunk it? Gold. I've slipped there and we've gone to palladium, which is looking pretty awful, and gold there, which is still looking strong. Looks fine. Could it go for another one? Yeah, absolutely could go for another one. In fact, it reminds me of digital gold, so that looks fine. I'm not trying to run away from it or anything, but I just see that chart, and what I see is Bitcoin very much there. Some decent black candles through here. If you did knock out a third, no objections. I think that's probably the right thing to do. We've got a decent candle back here, and that's okay. You've still got 2/3 on the table, and we're just waiting to see how we respond at what is now clearly an important point of supply on this chart. Okay, doesn't mean the party's over. It just means you're taking a little bit of a progression measure, and you can always get back in if you see the right signals here. If you get back in a little bit higher, it's not the end of the world. If your ultimate goal is whatever, 100,000. Ethereum, let's just check that one out while we're here. And I would say the supply side response is far stronger there on Ethereum than it is on Bitcoin. So relative strength in Bitcoin. Let us head over to, because we have switched to a whip around the grounds, and I'll just complete that. This is a concern for me when we're talking about equities, we're talking about risk. I know we're a little bit away from, is there some sort of revolution in commodities coming? And we'll continue to answer that question, but this is concerning. So we're seeing a pretty decent pop up in US 10s. We've got a Federal Reserve FOMC meeting later this week, as we do have a Bank of Japan meeting tomorrow. That's actually been inching up, and some brokers, I know Goldman Sachs, I think it's Goldman Sachs, I was reading it today, correct me if I'm wrong, but Goldman Sachs are tipping that they will actually increase interest rates tomorrow, but the consensus is for no change. And our own RBA, we've got an interest rate decision tomorrow coming up as well. So plenty going on, but we are seeing a general move up in rates, and of course that is hurting risk assets. It's hurting gold. We're seeing gold pull back. It's hurting Bitcoin, the ultimate risk asset. It's hurting stocks, the next ultimate risk asset. Stocks are just as risky as crypto, I reckon. They're all big balls of risk. Doesn't mean we can't trade them. Doesn't mean they're bad or evil. It just means we need to be mindful of those risks, and we need to manage those risks. That's the NASDAQ there. Looks a bit of an issue. In fact, the only thing I'll do while I'm here, SPE, I keep forgetting I was going to go to Skew there. What's Skew doing? Skew in indices. I went to go to the equal weight index, and I didn't end up there. Skew heading down, so that's typically your sort of hedging activity there. So that's a bit of a bearish indicator, I think, for stocks as well, but that's coming down. The SPXEW, if I'm not mistaken, is the equal weight index. That's where I wanted to go, because I can't get that in AIMI Broker, where I'm about to go next, and a little bit of a pullback there. A candle that is not ideal at all, and a far from ideal response to that candle last night. Hey, the trend is still up, unequivocally. It is still a very, very strong trend, but there's just a couple of signs of supply just starting to take control in the very, very short term, and will reinforce some of these themes when we look over here at the NASDAQ with my scratchings, and we're going to go back to auto. And last week in this session, I'm pretty sure I had that candle to look at, and I said something was wrong, and I said we would, as a result of that, not take on new risk or be very, very careful about adding new risk to the market. We'd be more vigilant at taking risk off the table. So really, anything that even resembled a supply side response, or anything that was ordinarily we might have just let it go another candle instead of knocking out a third, we'd be just absolutely brutal in getting risk off the table and just coming back to a more neutral stance after that candle. Looking at the 5 candles since then, I don't think you'd be all that disappointed by following my information. I don't give advice, of course, but following my information, my opinion. And let me reiterate, it's not the end, but it might be, it's not the beginning of the end, but it might be the end of the beginning, one of those silly things. There's something going on. The supply side has some power, and we just need to respect that. And we could equally see a huge white candle come back in, and that's cool too, because we're nimble. We're not big fund managers with billions of dollars to try and get out and into the market. We can add that risk back very quickly if we need to because of that long-term trend. But I think it's prudent. Still, nothing in here has told me not to continue. Now you know what I'm talking about. There's the candle. You know what I'm talking about. I'm sure you could picture in your mind. I'm sure you had the chart of your own chart. You know what the NASDAQ chart looks like. That's the candle I was talking about. And they're the 5 candles since. And the trend is still up. But we need to be prudent. And much of what I said was qualitative, not quantitative anyway. Russell 2000, last one I promise you, then we'll get back to your requests. I don't like that either. I don't like Thursday's candle. Friday is a reasonable response, but not good enough. And we actually have moved into lower peaks and lower troughs. Look at that. There you go. So you can see the candle, the corresponding candle is this one here, that I don't like either. And then we've come down and lower peak, and there you go. So that's where we are. It's not good. It's not bad. It's not a party. It's not disappointing. It just is, and we need to respond accordingly. That's all it is. Okay, it's scary if you don't know what to do, but if you know what to do, it's not scary. We just have to do it. Nicola, I'm not sure if that answered your question. There is some evidence that some commodities are starting to look a little bit more buoyant. I think the other part of your question is whether money is coming out of technology stocks. Hey, there's a little bit of money coming out of the NASDAQ, but whether that means all technology stocks, I don't know. It's too early to tell based upon that, but just trade what you see. Nicola also saying gold is doing well. I think it is too. Copper is also looking interesting. It's looking more than interesting. I think it looks very good. And lithium, I think that's the final part of the question. Yeah, look, I agree. Lithium has dragged itself into the interesting camp. We do have a short-term uptrend on lithium carbonate. This is the spot contract on the Shanghai Metals Market website. And it's the first time it's been green since May last year, so about 11 months since we've had any type of short-term uptrend. So that's interesting in itself. If you squint, you've got higher peaks and higher troughs, so the price action's turned good as well. But it is an extremely mild bounce, and it is not surprising. It's pretty much what I expected, that we wouldn't get this V-shaped here, that we'd get somewhat of an extended U-shape potentially, and a bounce along the bottom is the most likely scenario, and most likely scenario to continue to play out. If we look at something like spodumene, that's not showing a big bounce. There is it. That's lithium hydroxide. That's why. But spodumene actually had a little bit of a bounce there, also back over $1,000 US a ton. In fact, edging towards 1,100 if I'm not mistaken. 1060 on that one, 1080 on the S&P Global Platts contract. Sort of 20% rallies, give or take. And then, of course, the futures on GFEX, the Guangzhou Futures Exchange, showing somewhat more of a V-shaped rally, but not out of the woods yet. I mean, if this prints sort of 126, then this is looking quite interesting. And if it prints, say, 132, it's off. I mean, you're in a new lithium bull market. I'm a little bit sceptical as to whether that's going to happen. But there's nothing indicating that it can't at this stage. I'm concerned that we do have 2 lower peaks, but the troughs are rising, 109,400 versus 111,150. If we were to close beneath 109,400, I think we're in trouble. I think we're in proper trouble, and that would, again, probably confirm my suspicion that this is going to be more of a bump along the bottom. But the low is in, let me reiterate, I think the low is in. I don't think we'll get back to 85.4, famous last words. I just don't think there's this huge V-shaped rally coming, but I'm happy for the price action to correct me if I'm wrong. Let us keep going with your requests. I think that is a pretty comprehensive whip around the grounds and hopefully answering Nicola's question. Nicola did want to look at a few Australian and US energy stocks. Let's kick off with her Australian stocks, Karoon Gas. I can't see anything good happening there, unfortunately, Nicola. You know, it's very much sideways in the short term. The price action is extremely choppy. What we're seeing here is indecision. This is the market telling you that a bunch of people think it's good value and a bunch of people think it's not good value, and they're selling and or they're not demanding. So look, if the market can't make its mind up, who are we to try? Is there signs of an aggressive setup in there? I don't think so. Too many black candles for me, far too many black candles. The basing pattern isn't flat, it's kind of choppy as well. I don't mind a basing pattern, but that's too choppy. Volume, well, there's a big spike a couple of days ago on a white candle. That's interesting and that's good too, but not enough to get my money on this one. Look, it might start to look more appealing. Not might, it will start to look more appealing above 210, above the long-term downtrend ribbon, and above that peak here from December as well. Okay, but not interested until then. I expect we're going to get a bit more of ditto on Woodside. We did kind of entertain it. Did we entertain it for an aggressive setup here? I might have kiboshed it on its proximity to the long-term trend ribbon, is my guess, as literally a cat tried to jump up on my desk. Yep, there you go. I was going to grab it and show it to you, but it's run away. They're going a little bit mental at the moment, as they do at this time of the evening. No for me on Woodside, and we're going to Santos. And that's probably the best looking one out of them, but that's not saying much, is it? Because they look pretty lousy. And we'll do US ones later. Okay, Jackie's got MLX, which is far more interesting because it's a tin stock, and I showed you the tin chart before. It looks pretty good. Let me make sure that your questions, there's nothing major going on there. But it is sketchy, it is blocking. I think Jackie might have mentioned that in her question. She's saying, look, it is one of those sketchy, blocky, not great price action charts. So how do you trade these? Well, it's not that you can't trade them. It's just they're difficult. They sketch along, and they're volatile, but they can still trend in that volatility, and I think that's what this one is doing. If I had this, I would happily hold it. There's no real major signs there to get out. I know today's candle wasn't ideal, neither really was Friday's, but even together they don't constitute anything that worries me that this current short-term uptrend is coming to an end. I think they're pretty consistent with that sketchiness and choppiness. I think it looks fine. Would I buy it? It's not really my style to try and fight these ones, but if you knew something about the company, you really thought there was something there that the market hasn't seen, well, the technicals permit you to do that. The technicals are fine. Short-term uptrend, long-term trend, really turning to up. The price action, otherwise, from the candles, the sketchiness of the candles are quite good, and then when we do have candles, they're pretty decent. So I'm pretty happy with that one. And the volume is actually starting to pick back up again after a long period of consolidation, so that's a good sign as well. We've got some interest back here, so pretty happy with that. VMS is the other one. That's the other tin stock. Almost go ditto. I don't think this one's as good as the last one. We can see some black candles coming in. We can see some decent price action to the downside. Look, it is bouncing and holding off the short-term trend ribbon. That's a good sign. But yeah, today's candle kind of confirming the supply is coming in and not as interesting as the last one. So if I had to pick between the two, I'd definitely go for MLX. So they're the two tin stocks. Let's go to Brendan, who's got coals. Bit of a change of pace here, but not dissimilar in the charts. Yeah, look, I'm just not naturally drawn to charts that look like that. Okay, so we don't have one of those classic sort of base patterns. We've really just got chop and chop and chop and chop, and we've just kind of chopped into a different region. I'm guessing on half-yearly results, perhaps. Look, I think it's fine as long as the short-term trend ribbon and long-term trend ribbon continue to offer dynamic support. Beneath a point, I'll give you a point, I'm very concerned, and I would not want to have any risk on this, to be honest, let alone a full risk position. So below 1630, close beneath that, I think we're in trouble. Until then, if you had it, you could hold it. If, again, you had some sort of affinity with coals, I don't know why you would, but maybe you do. Maybe you think it's a wonderful place to shop. Yeah, look, I think on balance, the probability has switched towards excess demand in the system rather than excess supply. And on that basis, it probably will trend higher. But is this going to be a really clean, explosive move? I don't think it will be. Do you know why I say I don't think it's going to be a clean, explosive move? Because look at the history. The leopard does not change its spots. It's hardly printing anything that resembles decent price action in its history, and it has these jerky movements every now and then just screws around. So not one that I would ordinarily be attracted to. Reiterating that, which is what I said at the start. This one I would be attracted to because, look, don't get me wrong, there is a lot of chop and churn in there, and that's, hey, welcome to Australia, the land of the illiquid. But at least we're starting to get a real trend at the end there. Short-term trend is up, long-term trend is good. The candles are pretty good, the price action is decent as well. And yeah, I've got no objection to having a full risk position on this if you've got it. And if you don't have it, I would happily add some risk to this one right now. Yep. If you're only trading Australia, I don't think you'll find many better charts than this one. That is a picture of excess demand. So 1 out of 2 there for you, Brendan. Peter's got Droneshield, and Peter, I apologise for not getting to this one last time. You sent it in about 10 minutes or 15 minutes before the start of the session. I just didn't see it in the rush to get started. I don't think I would have been able to give you any different advice than what I'm probably going to tell you today, because I reckon we would have had that candle there, and I probably would have said something along the lines of, well, you're kind of working your way out of this one. There's your species ending event. They don't come any clearer than that. I don't know why that occurred, okay? But we know what it means, and we don't care why it occurred. Ending event, okay? Think the dinosaurs versus the big rock that fell from the heavens. Okay, that's kind of what you think about when you see that giant candle. And I challenge you to go and find a candle of that magnitude in that type of an uptrend, particularly when it's come after, and this is kind of the really important part, when it's come after that, because you have to admit that's the perfect candle. That's the perfect candle, it's a perfect chart. Right? And this might concern you about my methodology as well, and if it does, you've got every right to be concerned, because here's somebody telling you right now that that's perfect. That is perfection. I can't fault that. That's 10 out of 10. When I see that chart, except for one reason, I want to buy it. Okay, and the only reason why I have some trepidation of buying that particular chart is I'm just looking up at where the big round number is here at $1, and just getting in this close to $1, it's hardly worth it, right? But let's put that at any other price that's not near a round number, and I'm telling you that's 10 out of 10. And that should concern you, because you've got this guy telling you that it's 10 out of 10, and then look what happened next. But Carl, look what happened next. How could that have been a 10 out of 10 chart? I can assure you it is a 10 out of 10 chart. It is a picture of excess demand. But the only fault, the only flaw in the methodology I teach you is that I don't know the future, and you don't know the future either, and we can't tell what candle's going to print next. I know it sucks. And anything can happen, and anything will happen. And there was obviously some fundamental reason for that. Okay, some news item, nobody knew, and then everybody knew. And we see that big adjustment. But taking into account that information, the market has said, no, it doesn't matter that was 10 out of 10. This party's over. Very much so. This party is over. And when you see something that big, it probably will not recommence for a very, very long time. Now, I see that, and for me, it's a no-brainer. It's compulsory. For me, I see that, just get the hell out. You may wish to try and find a better price, so sell a third and try and extricate yourself from the rest of it. And I think that's what I would have said if I did it for you last week, Peter. And really, I think there are other signs here. I mean, even that candle there is just as damning. So if we call this, well, we know we've got the species event, but if we call this the JAD candle, the JAD candle, which is the just as damning candle, it's an important technical term here that I've just made up, the JAD candle, okay? This is the most important thing I'm going to tell you today, the JAD candle, not in any textbooks. It'll be in the textbook I write eventually. It's just as damning. You had that huge drop, and there are going to be people that absorb, interpret, and then implement that information on a delayed basis. They might be living in a different time zone, so they won't get the news in our time zone until after our market is closed. We're talking about overseas investors here. They absorb it and they've got to trade the next session. And if they actually don't, if they think we've overreacted and this, there's no way this stock should be so cheap now, we're going to buy the hell out of this thing, then that JAD candle wouldn't look like that, would it? So the fact that the next time zone traders came in and didn't buy it, that's concerning. There's no speculative buying coming in, or that I'm conditioned to this going up. I'm conditioned to buying the dip. Here's the dip. They're not buying either. So you've got these two huge pillars of demand that are now absent from the market. And while supply, you can tell supply has subsided somewhat because we didn't really collapse on that day. But supply it's just not finding that demand, is it? So just as damning for me, that candle there. This is kind of your confirmation candle here. This one here is the keys. This is textbook stuff here. Not textbook as in the real textbooks you buy from the shops, my textbook. This candle here is really confirming everything we know. And if you, for me, and don't take this, I'm not trying to be facetious here or nasty or unkind in any way, but if you are still holding this stock after that candle, let's call it the CF confirmation candle, I think you need to head red, honestly. And I'm happy to concede that I can't see the future and this might get taken over tomorrow at $2. I don't know, but for me, the party's over here. And that's just how I feel about it. That's my analysis. And if Droneshield starts going back up, it starts printing white candles from tomorrow, it starts making higher price action, bang, it's a new stock, it's a new trade. Everything begins again. You will approach this like you never traded it before and just do the right thing. Okay, that's all of the Aussie requests from offline. Let me get to yours. I know we start slowly, but then we pick up the pace, don't we? You've seen the videos. we go really fast towards the end. I don't know. Hopefully you'll learn a thing or two along the way as well. Maybe I say something different this week than last week. That helps you. I like this one. I think this is really good. S32 from Colin. So this is key in keeping. We have a bit of a theme today about these commodity stocks. So what does S32 do? About 50% of their earnings comes from aluminium, Colin. Did you know that? We looked at the aluminium chart. Not much dice, right? Not that great, but not awful. And then, well, I want to say 18% comes from, is it manganese? No, you'll know. Coking coal. It might be coking coal is the next biggest. And we know that's in the toilet. Then there's like nickel, it's about 8%. There's manganese is maybe 9%, copper is maybe 7%. And you might say, this Carl's really smart, he just knows that off the cuff. I know that because I looked it up today because I wrote my evening update. And I was curious, I saw this chart and I like this chart and I really like these 2 out of the last 3 white candles. And for me, this is set out for an aggressive setup. That's the only reason why we're talking about it. It's not a turnaround play. Okay, a turnaround play would imply it's much, much lower risk and a much, much higher probability of really turning around and going back up. This is aggressive and you have to treat it as thus. We're about to bang up and maybe it's even gone too far already in terms of that big ball of dynamic resistance we're about to hit, which, let's face it, you don't really want to muck around with, okay? But I love those candles. I love the volume that's coming in, and I like this bit of basing price action here. I think it looks really interesting for only an aggressive setup. And remember how we trade these. We trade these with a little bit of money. Let's abbreviate that to little bit of money, right? And look, if it gets better and it throws in a huge white candle into that zone, I mean, it did it there too, by the way, we might add some risk. But I just think this is just a punt, and that's all. It could develop into something good. It could turn into a turnaround play. Okay, it might not throw in these black candles here. It might keep printing white candles and start to push through. And then we would be adding more money and more money and more money. But I think you can start to put some risk on this one, but just a little bit, okay? Totally at odds with anything I would have taught you back in the Think Markets days, where I just didn't think you had the skills and the understanding of my methodology, but hopefully you can see that that's consistent with the stuff we've been talking about the last month or so. But it is aggressive. So understand it could turn around and go the other way because it's still a long-term downtrend. So yeah, something's going on there. A1, see, I wouldn't say this is an aggressive setup. Okay, some very similar characteristics to the other one, but you can see that last candle is nowhere near as good. The price action is choppy and churning, and I would say there's a much greater probability that this long-term trend ribbon is respected here. Okay, and I don't think there's as much of a volume sort of response there either. So this one, no, it's not something I'm interested in. It's not to say it can't go up. It's showing some signs. Higher troughs are coming in. We're trying to go back to higher peaks. There's a few more white candles. And yes, there's some elevated volume in there. Okay, maybe this is a big base pattern. Maybe that's the low. But there's too many maybes for me. Okay, I don't think that's a stronger setup. We're just trying to find the stronger setups. But hey, you can do whatever you want with your money. And that is the most important thing I'll tell you today. Let's go to Lotus Resources for $1. What a wonderful chart that is. That looks fantastic. Yes, no complaints about that one. It is a picture of excess demand. Yes, it's a bit sketchy, and this is a great example, a great sort of segue from the, it's not really a segue because we haven't come straight from it, but you get what I mean, from MLX. It's a great one to compare and contrast with MLX, because that is also choppy, but you can see they can trend. This one looks great. If I had it, I'm happy to run a full risk position. If I didn't have it, I'd be happy to add some risk on Lotus. That is a uranium stock, if you didn't know. From Michael, hi Carl, good evening. Could we look at STX and RL? Sure, we can. Is this an aggressive setup? It's fallen a long way with a big thud and not a huge bounce. I think it's still a little bit early. Let's see at least some higher peaks first, some higher troughs first. Well, I guess you could argue there is a tiny one there, but the price action is pretty rubbish. Let's see something a little bit clearer. That is another trough, and then maybe with the right candles, it could become aggressive. I just think this is just too severe for me. It hasn't built up enough of that basing pattern yet. The key to that aggressive setup is that basing pattern. The churn. You know what I mean. You know how this feels. You know you've been in these stocks that have churned along the bottom for so long, and you just wish that your pain and misery somehow would end, yet it continues month after month. STX hasn't experienced that yet, and that is a key, because that dissipates supply. It sucks. It gradually gets rid of the supply in the system from people that give up, so that it only takes a little bit, it takes far less demand otherwise to be able to start that train again, if you get where I'm going with that. I don't think there's enough pain. I don't think enough pain has been felt yet in STX. And Michael, if you own STX, then you know exactly what I mean by that, because you're a sucker for pain. I'm pretty sure I've said that to you in the past. I'm sure I said that around here. Looks fine. You can buy it if you like pain. Those are my exact words. Go back, check the video. RRL. I'm going to go ditto. If you like pain, then this is the stock for you. Let's keep moving. SFR we have done. Let's go to ESPO, the Esports. There you go. Esports and Gaming ETF. I know that was, I recently wrote an article on ETFs. It's called the A to Z of ETFs. It's a great article. If you're interested in trading ETFs, you don't know what they are, go read that. It's on the Market Index site. I think this looks fine. We are seeing some signs of the pattern, the supply pattern manifesting itself in the NASDAQ, starting to manifest itself here. So you would have to have a pretty bullish view, I would say, on the other stuff we've talked about to be adding risk to this at this stage. Because at the end of the day, to do analysis on this alone is a little bit risky, because it's not its own stock. It's not a company with earnings. It doesn't have a board and a management to make good decisions and bad decisions for supply and demand to then interact. It's going to move based upon how the stocks which underlie this instrument move. Okay, and those stocks are probably moving in line with the NASDAQ, to be honest, given the name of this. So at the moment, no troubles. From the technicals I can see, I'd be a happy holder. I'd still even be running a full risk position, okay? But to get into this here, I'd want to be more confident that the NASDAQ is about to break back out again. Okay, hopefully that makes some sense for you, Jackie. Let's go. It's HMC in the USA. Adonis will do that very soon, as we'll do with yours, Jason. Colin, we've done your S32. I think you might have asked me. No, we have done it, but I don't. Yeah, I think you asked me for something else. That's fine. A1M, I think we did as well. If I'm not mistaken, yes, we have. NXL, which is Nuix, looks fine. A little bit like that QBE one. No complaints. Happy to run a full risk position here. If I didn't have it, actually I could add some here. It's fine. I mean, it's just hovering beneath a point of supply and what was a nasty, not quite a species ending event, not quite, it was the lower shadow, but a very important supply side event which creates a massive area of latent supply in the system here, and you can see it's bashed into it once. It's removed some of that supply. You've got to imagine that when this supply area is created, think about how many people were getting in. You look on this day and this day, there's quite a lot of volume in here, right? So people kind of getting stuck in and around that level. The first time we hit it here, we hit that area and we take some of that supply out of the system so that the next time we hit it, it's only that big. Okay, so the next time we get up there, which is over here, we take a little bit more supply out of the system. And here we are having another go at it here and removing just a little bit more supply to the system. You can imagine when we finally get to the point where that's gone, we've got this supply vacuum. If demand is motivated enough, prices will find it easier to rise. So pretty happy with that one. Let's go to EOS. It's good. It's the only issue I have is that we're pulling back, so we should really respect this area's demand. This is all demand through here. So we really shouldn't come too far back into that demand zone. And today's move sort of put us in there. To be fair, we did bounce out of there pretty well, but a bit of supply by the end. This is not a write-off by any stretch of the imagination. There's no species ending, no meteors off in the distance, slowly getting bigger, and the dinosaurs looking up in the sky wondering what that is. It's not happening. But it's not ideal price action. So I would refrain from adding risk to this one, but if I had it, I could still run a full risk position. I'm very careful, I think, about a close beneath this shadow low here. It's kind of 171-ish. Then I think we're in some trouble. Then I would be managing my risk at that stage. But until then, happy to continue to ride what is still a very, very good trend on EOS space lasers, don't forget. And I know we've got a bunch of people in that, and I know they've done pretty well, so hopefully that's you. Let us go to SPR. Well, we've got a little bit of a problem. We're seeing some fingerprints of supply in here, a bit of volatility, on a little bit of volume actually. We removed a bit of demand in the system, a bit of motivation. Spartan Resources, I was about to say, as long as it's not a dividend, I don't think this one's paying any dividends. We are in dividend paying season, that's all. So yeah, look, I would take some risk off the table on the basis of that candle. It's not just that. We've also moved back into lower peaks and lower troughs. I know it's only little, but it is true, and that is my model. So I could take a third off the table. If you wanted to do 2/3, that's up to you. I would be more interested in doing 2/3. We're not far away. I don't really want to see it close beneath, because that's a trough there as well. Then you're starting to interact with the short-term trend ribbon where you could see some demand. So just play it by ear. And if there's a candle here with a lower shadow, white candle, you probably don't need to. So give it another candle. If it turns up being a black candle into the green zone, then I think you're probably doing another third. And then your last third is probably coming out in and around that 50 zone there. But I do think we're managing our risk a little bit on that one. And PNV is fine. I don't like that big candle here. I could do a third just on that candle. It's too big. There's too much volatility. There wasn't enough volume. Maybe that's a saving grace. It's come back really well here. So a happy holder of 2/3, and I think that's where I am on this one. I'm probably happy to run a plus 2/3 risk position on this one, which implies that you've got 1/3 out, just as a precaution. And I'd happily add in that third again if we can print a nice big white candle just closing in on 250 again to say that, you know what, this really isn't as important a point of supply as I thought it was to start off with. But happy to run 2/3 there on that one. Let us go to SRZ. This one's from Robert. Doesn't ring a bell. Okay, it's one of those pretty tiny ones. Look, it's got some stuff going for it. Massive volume. Short-term trend has turned up. I mean, it's been one of those, let's face it, it's a piece of junk. It's a proper piece of crap. Let's face it. It's like just classic Aussie penny shit, right? Like this is what we're good at in Australia. What are we good at? I don't know. We were good at sheep at one stage. We're good at iron ore. I don't know, but we're just freaking awesome at churning out hundreds, if not thousands of companies over the years that just evaporate shareholders' money. Just like flippin' legends, aren't we? Now, every now and then, one of these pieces of junk, finally the light shines. All right, like it shines on a dog's ass every now and then, and the light's shining. Having said that, look at the price action. It's sketchy. The candles are bloody sketchy. It's one of those, hey, it's your money, right? But I can see a reason to have a punt, and that's all it is. But don't go overboard, and understand that the leopard doesn't change its spots, and probably at some stage it's going to revert to being a piece of crap. Now, Robert, if you disagree with anything I've said, please let me know. ABB, not a piece of crap. Oh, but it is look at this. It is a piece of crap. Look at that. I don't know, what was that, earnings? I didn't see it. It was looking fine before that. I don't know what happened. Was it a dividend? Was it a special dividend? No, it wasn't. It's Aussie Broadband. It lost the contract. It lost the Origin contract. So as good as its half-yearly results were, you can't see the future. Origin pulled the contract and is no longer using these guys as their white label for Origin's internet provider. So they lost it to Superloop, and Superloop gapped up. I mean, the Superloop chart is the opposite, SLC. Boom! And, and this here, if there is a flaw in my model, is that it can't see the future, and I'm giving you some pretty colourful language today. Shit happens. It does. It happens all the time in the markets. And right here I said, hey, this is great. This is a company I want to own. Okay? Definitely. Hang on. Even there. Oh, look, those two candles together aren't ideal, are they? They're not perfect. And we've got pretty close to 5. But I think you're pretty jittery if you knock out a third there. And see? And you didn't have to. There's nothing to be concerned with. This is fine. Happy holder, full risk position. Well, that's not great because we're confirming supply now, but not enough to get out. I would say if we close beneath 430, well, I'm doing a bit of a case study here, step forward case study. Close beneath 430 for me is 100% having to start to manage my risk. And because of this and this, I would do 2/3. Okay? Not 1/3. Oh, see, I don't like that. I reckon pop out a third there, and on a close below 430, we do the second third. Oh, nothing to worry about. So we've knocked out a third, we've still got 2/3, and we're patting ourselves on the back for holding 2/3, and we're annoyed that we got out of 1/3, but hey, that's okay. And then what happens? Oof, what do you do here? We've knocked out a third. Do you want to knock out another third? That little lower shadow may be just saving it from knocking out, but we can see something's not right. Okay, and the not right is probably people in the know, right? The old Gordon Gecko, if you're not on the inside, you're on the outside. People on the inside knowing that they want to sell some, and still fine, isn't it? At best, we've got out a third here. We know we want to get out another third below, 430. You might do it there. Boom, and you really didn't have a chance. Even that day didn't close below 430. I know I skipped forward too many candles there, but certainly you're out a third. Maybe you got yourself out of 2/3. 100% you don't have a full risk position using my model, and you're probably pretty happy when that happened, and there's nothing you could have done. You can't see the future. Okay, what do we do now? Well, understand that this candle is not a white candle. Oh, but Carl, it's white. I can see it's white clearly. Look, it opened at Carl. It opened at 340, and it closed at 355. And a white candle is created when the close is above the open. That's how that works. That's not a white candle. That's a big black candle, because you have to factor in the gap. The gap is real. The gap is a demand-supply event. It's just not shown up in a candle. One day I'll program a candle that shows gaps, and you'll get proper candles. Maybe that's what I'll call them, proper candles. I should do that, shouldn't I? And I should put it on trading for you all to use. That's a species ending event. So that is a compulsory 1/3. So you'd be out, well, it's compulsory 2, it's out. It's get out everything. So you probably don't have any left. That's how I would trade it. How you trade it's up to you. I really enjoy doing those case studies with you. Maybe one Monday we can just commit to just, you might come up, hey Carl, I'm really interested in XYZ on this date. Can we go to that date? And I want to know how you would have traded it. Maybe we can do a night of those. I'll put out, well, maybe, we can do one a month or something. We can do one next week if you like. Let us keep moving. Fascinating case study, and I think that's how you learn, by doing those case studies. Winsome Resources. I like this for an aggressive setup. I liked it earlier though. I think this is the candle. I think that's really, really interesting, and this is a great confirmation. And so is this one. And I think today is just in keeping with what we're seeing. So if you are going to throw yourself in front of the bus and go for the aggressive setup, please at least look for these sorts of things first. Having said that, look, did have the huge basing pattern that I've talked about in the past. So maybe that's keeping you away, but I just think this is just looking for this. It's actually got clean price action. High peaks, high troughs, white candle. This looks. I could happily add some risk to this. I know we're very close to the long-term trend ribbon. That's the only issue I have. But otherwise, happy to add some risk to that one as an aggressive setup only. Likes to bet is late. Sorry, I'm late. No worries. I love to see IVN. This is the MSCI Europe, Africa, I'm guessing. Again, depends on the underlying markets, but all I can see here is demand. So I'd be happy owner if I had it, and happy to add risk if I didn't, but understand that it's going to move based upon those markets. PSLV, that's not it. Try that again, PSLV. Don't have it, but doesn't mean I don't have it. Let's try somewhere else for you. PSLV. Okay, maybe that's in America, I'm guessing. So physical silver sprite. So just let me know where they're trading. Okay, so I don't go off on those tangents. I'll try that again when we get to USA. Let's go to WIA. Looks great. This is obviously one of those small gold stocks, which, as I said, piece of crap. Sun's shining. Go for it. Go for it. Have a trade. And the only thing I would say there's a problem here potentially is the supply could manifest itself around there. We're not far away from it, so maybe it's had a bit of a run. Look, if you had it, I would 100% happily hold it. I'd hold a full risk position. If you didn't have it, I think you're probably a little bit too late to do anything about it. But otherwise, I think it looks very, very good. And yeah, good price action, good candles. Great, some volume coming in there at the end as well. I've got a feeling we've done that one recently as well. MEI, big base pattern, but no, look, it's starting to look better. It's improving at the end there. I can certainly see some excess demand creeping back into the system, but maybe it's a little bit too early for me. This is a really convincing display from the supply side. So I just think we're probably going to have some issues here. So if I could forecast some price action, we're going to get something that's probably like this, and we might spend a bit of time around that area. Look, if you had it, I can see a path to holding it, whereas not that long ago, I couldn't see a path to holding it. So if you've got it, you can probably feel a bit better about yourself. If you didn't have it, it's not really one that I'm looking to trade just yet, but it's not that far away. Let's keep moving to FND, which is one that has been doing very well. It's not that one, I assure you, it's that one there. A little bit of supply coming in today, not ideal, but not a species-ending event, not a deal breaker. Still happy to run a full risk position on this one. I wouldn't add based upon that last candle though, if I didn't have it. Please stop putting any new ones in. I'll hit the bottom and then I'll bounce back up to the top doing the US stocks. We've done EOS, Huzul, let's do ZIP. Okay, so this is the one I wanted to talk about because we talked about species-ending candles, and I challenge you to find me one which was of the order of magnitude of the other one, which I want to say was Droneshield. There we go. So is Zip, is the big black candle on Zip of the magnitude of the Droneshield one? And I don't think it was, but I still classify it as a species ending event, and I got that wrong, completely wrong. I'm pretty sure we covered this in session a couple of weeks ago, and I said that's species ending. That's not good, and absolutely could not have been more wrong, because it's only pretty much put a white candle from there. So if you got out based upon something I said, I apologise, but I can't see the future, and I based upon my experience of those candles. If you didn't get out, well done for not following instructions, I guess. Not that they're instructions, of course, they're ideas. It's information. But it would have become apparent to you very quickly that there's really nothing you need to do apart from hold on. And even on today's candle, that's still the message here, I think. And there you go. No system or no methodology is perfect. The market will make a monkey out of you at some stage. But judge the system, judge the model on what it does the vast majority of the time. Thanks for bringing that one up, Uzul. I did want to talk about that today. Let's go to BHP. Please feel free to use it. We had some contact with Sabet about BHP, and we did a case study. So he sent me a chart on where he thought the -1/3 were, and asking for where I thought the -1/3 were. And this is all historical. It's navel gazing. Nothing you can do about it now. But I did point out that these two candles here are very, very disappointing, and in themselves probably not enough, given that the trend was still very strong at that stage. But I think this one here is where you're doing your first third. And I really don't think there's any question about that at all. And then when you break beneath that trough here, I do think you're going your next third, and this is your JAD candle here. So on your JAD candle, which is just as damning, I think your final third is there. Okay, I just want to tune your eye into how this works. So that's your JAD candle. This complete lack of response here. Let me just draw that. Maybe let me zoom in, and you'll see what that candle looks like. It's this one here. And then here, it's if you didn't follow any of the other ones, that's definitely where you're going. And then probably here as well, and then really here. And I know it looks like it's bouncing from there, but it's still a supply side candle. And then really here is the next clear one, confirmation, and then probably here or here. And there's, how many invitations did you need using my model to get out of your BHP? Would you have got out at the top? No, but you would have got out pretty darn close to it. And in fact, there was one that I discussed in this case study with Sabet earlier, which is the $50 round number as well. So as a precautionary measure, and if it pushes back up, you can always get back in. So maybe there's a reason to get out earlier than that. But that's an interesting case study also. Let us go to that's US ABB. ABB were trying to take over Superloop, but I think that fell through, and Superloop picked up that contract that they lost. ABB case study was very useful, Carl Husel. Thank you, Husel. Okay, we're going to head back up to the top now. We're going to do US stocks. So I'm going to head over to the trading view screen now, and we're going to kick off with INFA and Microsoft for Peter. Let's go INFA, and we'll go back to here. Informatica. How are we going for time? Not too bad. I reckon we'll finish probably next 15 or 20 minutes. Great chart. This is concerning for me. Where's my arrows? I've got to get better at, I can always highlight it. This here is an issue. And yeah, look, I'm probably going to refrain from, as good as this looks, I mean, if you could erase those two candles from history, this would be a 10 out of 10 compulsory buy. But they're still there, and I'm concerned about the supply that could be just lying in wait at that peak. and it makes me a bit nervous about this. And that's the only thing. That's the only thing I can fault here, and what is otherwise a 10 out of 10 chart. And just decide whether you want to add risk at this stage of the game. If you do, then like I said, apart from those two candles, that's a 10 out of 10 chart. Okay, let us go to the next one for Peter, which is Microsoft. Let's definitely look at this one. One of the Magnificent Seven, obviously one of the key stocks to continuing this role in US markets. And look, up until Friday's candle looked impeccable, really just looked impeccable. And Friday's candle is nothing to be really concerned about. It's far from ideal, but it's not species ending. It's just not concerning at all. So this is still stay the course. This is still full risk position. Obviously, we're not adding based upon that last candle. We need another white candle, another lower shadow. But that reassures me. I look at this chart and I feel more reassured about the longevity of this US bull market. So happy with that one. Let us go to AIT. I've got to let's look at this one. Then I might look at some of those other Magnificent Sevens. This is a fantastic chart. So there is also that supply area in there, and it's a decent one because this candle and this candle, even that candle, there's supply. Oh, what's going on now? Because we're highlighting. It's sort of a cloud now. It's a cloud of supply about to rain supply on the market. Not as pronounced, not as just out there like the last chart we looked at, but important. I think this is a better setup. Out of the two, I'll probably go for this one, but I'm not sure. I'm honestly not sure if I'd go either of them on the basis of what's there. Let's keep looking. Let's see if we can find something that's just perfect. There's nothing worrying me about that chart at all. Hey, don't get me wrong. These are very, very strong setups that you're giving me. But we have to nitpick because when we start to look in the US, there's just so many opportunities. So we should have some way to differentiate them. And I can't fault this one because we don't have that big supply area to contend with. And I bet you when we go out here, we're going to see it's all blue sky. And look, it is a stairway to heaven. Ultimately, the trend will end. There's no doubt about it. But there's nothing in there to suggest that's going to end any time soon. You could have had those concerns on this day here, okay? And now it's $15, $20 higher. So that one looks absolutely fine. I'd happily add some risk on that one if I had the room in my portfolio to add risk, if that's the way I was feeling. That's for Peter. Let's go to Alexa Bet's US stock picks here. Might be PSLV, I reckon. No, I haven't found it here, so I have no idea where that one is. Actually, he wanted ADT, which is also a silver stock. Oh, look at this! I'm in my studio apartment here with my window. Oops, where's that? Where am I going there? That was a wrong click of the button. I meant to go over here, and just for completeness, I promised to do all comers. Looks fine. Who's that for? That's for Alexa Bet. It looks better than fine. Look, I like the candles. The price action is good. It's just very choppy, isn't it? It's hard work. Adriatic Metals, if you've owned this before, you know this is hard work. But I think it's fine. If I had it, I'm a full risk position kind of guy on this one. If I didn't have it, I could add some risk on this. But I'd have to be a bit of a pain lover. If I love pain, I'm definitely going to buy some Adriatic Metals. Okay, let's go back to this one here. And I've done those. They're all US ones. I've done Bitcoin and Ethereum, Amber. Hopefully you saw those. They have dropped a little. Ethereum looks more concerning, Bitcoin less so. But mindful that another peak coming up near those highs would not be good. If you're doing tin, that's why we looked at SRZ, by the way. It was a tin stock. That's why it's had a little bit of a pop. HWM, which I feel we've looked at recently. HWM. Oh. I'm in the wrong place. I'm going to get myself to the right place. Here we go. HWM. Howmet Aerospace. Okay, big supply event here. I'm not a buyer because of that. I'm concerned about that supply. I'm concerned about we could see more supply manifest itself as we approach that level. If I had it, I'm not running a full risk position. I reckon based upon those two candles, blend them together, it's an important supply event. I'm taking some off the table, but it has come back really well in these two, or even this one's not so bad. This 4 candle pattern is fine. It's very good. It's demonstrative of excess demand, holding rock solid for the time being. And as long as we don't close underneath that level there, and I'll tell you what that low is. That low is 64.39. So, as long as we don't close, say, below 64.30, I think this is fine. Okay, and if you haven't gotten out any, we're running a full risk position, but we're very mindful of what could happen here. Okay, just watching for the black candles, watching for the upper shadows, and then taking the appropriate actions if we see them. Otherwise, happy holder. I'm not going to be a buyer just at this stage because I'm concerned about that supply. Maybe a little bit pedantic, but that's just the way I feel at the moment. Let's go to Jason's TAYD, Tailored Devices. Oh, this looks good. Let me get my default zoom going. And I want to just have a look out to see. I expect there's going to be, it's blue sky on the weekly. Blue sky. I can't fault this. So this is why I kind of held back on a few of the other ones and said, look, we're probably going to find that perfect chart. This is a perfect chart. This is a 10 out of 10 chart. I can't fault it. I don't know where it's going to be tomorrow. I don't know where it's going to be next week. It could be $10 for all I know. But all I can tell you is this is exactly the type of chart my model is drawn to. It's just pure excess demand, and therefore happy to add risk to that one. No questions asked. Thank you, Jason. CWST. Can we top that one? Pretty close to it. The price action's better on the last one. The candles are bigger. The peaks and troughs are far more separated. But this one is very good as well. The only issue I have is its proximity to 100. I wish it wasn't so close to the round number. I can make a dispensation if it's been to that round number before, if it's not a big surprise, like everybody's hanging out for it. It's gotten close before, but I wouldn't say it's tested it before. Look, I think it's spent enough time in the 90s for 100 not to be an issue. You get where I'm going with this? I love that chart. I mean, I just think that looks incredible. If you look at like a measured move into this congestion zone, but I think the congestion is happening close enough to 100 that 100 is not a surprise. It's not, I'm hanging out for 100. I think we're hanging out for more than 100 now, aren't we? This is very good. This is the second best chart I've seen today, only eclipsed by the last one. And if I had it, I would happily run a full risk position. And if I didn't have it, I'd be looking to add risk on this one. Okay, let's go to the next one. We're 2 from 2, Jason. Well done. In Perry's absence, you are doing a fantastic job. Perry, I think, still another week on his holiday. And ditto on this one. Very much turnaround play. You can see the difference in setups here. And this is wonderful. This shows how my method works. You don't have to just buy those bottom left, top rights. We can fish around for some aggressive setups. If we're looking at, let's get the, in fact, what we need to do is get some volume and volatility going. So I'm trading a little bit blind until I can see what's happening in my 2 important indicators downstairs. And we've gone back to copper futures, haven't we? So that's not perfect. What happened there? That's what's happened there. Let's go back to where we were. I'm going to just quickly go back to TAYD to see if there's anything in the volume and volatility that I don't like. No, massive supply removal here. I'm liking that even more. Let's go to CWST to see if there's anything there I don't like. No, nothing sinister going on at all. So that's fine. And AFG, back to that one, American Financial Group, the turnaround play. And what I was looking for down here, I was looking for, like a volume increase of volatility. I just didn't see it. It was actually quite a benign low pushed out. But then these 2 candles here, the ones that sort of draw me in on elevated volume and the big white candles. That's maybe your aggressive setup, kind of in the dark red zone, but putting a big white candle into it. And certainly around here, it's no longer aggressive. It's starting to be a turnaround, isn't it? And then through here, this is the key here with the lower shadows, but printing lower shadows into what is now clearly a demand zone. And don't forget, ladies and gentlemen, please never forget that my trend ribbons don't exist. They don't exist. They are purely mythical creatures And there's no reason why they should work as well as they do, but they do. And here, those lower shadows telling you that the historical demand, the dynamic supply is now acting as dynamic demand. There you go. Turnaround play looks good. The only issue I might have here is if I zoom out and I start to see some supply around there. That's miles away. There's maybe a little bit here as well. But yeah, I think I'm okay with it. This is the big one here. Not to say that's not important. I think it's fine. I could add risk to this. It's not up there. It's not as good as the other ones we've seen, but you do want to try and get a mix of those setups in. So if you're taking two continuation setups, you do want to have a couple of turnaround setups and a couple of aggressive setups as well. Let's go to EML. More of a continuation setup. Let me zoom out and just double check what's lurking out there. Okay, not as good as the first two. Okay, but still very good. This is, I think you treat this as a bit more of an aggressive setup because it's already separated from a light green zone. It started to move. It's close to 30. I mean, I think you still want to have some risk on this. I just don't think you're putting a full 1/3 entry into this just yet. Look, if you've already got it, you can happily add risk to it. Yep. Let's go to AIG, which is just a steady as you go, one of those big blue chip stocks. Blue Sky, is it? Yeah, pretty much. I mean, it would have to go back a long way, I think. Certainly further back than the market can remember. So this is obviously American International Group. GFC pretty much went to zero, had to be bailed out by the US government, didn't it? Starting to come back up now. Happy holder. Hopefully history doesn't repeat itself. If I didn't have it, yes, I could happily add some risk to that. So very good. Thank you on all of those, Jason. Adonis wants HMC. And then before we go, we'll just have a whip around on some of the bigger ones. I think it looks fine. It's not the most compelling one I've seen. And it's a little bit sketchy here because it's trading as an ADR, which is an American Depository Receipt, and that is a security which reflects the trading of a security on which is trading on its native exchange, let's say in Japan. This one obviously being Honda. Yeah, I've done that one. That's the ESPO. I've done Sandfire, LOT, and I'm back to the top of the list, which means everything's done. Before I go, let's just have a quick look. We've done Microsoft. Let's look at Apple. We haven't looked at that one for a while. And then I do need to do NVIDIA as well. So how will we look at that? Well, that's interesting, isn't it? Very different chart to many of the ones we've seen. There's some real issues here. Some real problems. This is changing its trend. We've obviously pushed off the long-term trend ribbon. We've come down. We've tested it. We've got this bouncing ball pattern here. What happens when a ball, it's that ball which is bouncing on the table, ball that's bouncing. You drop a ball, hits the table, bounces a little bit lower next time, a little bit lower next time, and then it gets to the edge of the table, and there's no table there, right? I've drawn that too far. Let me say it like that. There's no table, and then it drops quickly. And we're still in this bouncing phase. But where the long-term trend ribbon before was offering dynamic support, it's now offering resistance. And I'm not trying to predict there, but that could be what's about to happen, and that will have an impact on the major indices as well, because Apple has a major weighting. I could not have a full risk position on Apple. I don't think I could have any position on Apple, to be fair. And that's saying something. Let's go to NVIDIA. Which I called the top on. I've officially called that's the top. It will not take out that high. More than the near term, I think it's more medium term, and it could be long term as well. But I'm saying not for the next few weeks and months that we'll see it trade higher than that. And I'm going to stand by that today. Had a ripper candle there, didn't it? Ripper comeback. And I still think it's probably 50-50 on this one as to whether it could reclaim that momentum. But I'm going to stick with my initial gut feeling and say, no, this is a pretty important candle. It's a big supply side event. And as long as we hover beneath that and stay beneath that, I think we're just getting ready to roll over. So how would I trade it? I couldn't run with a full risk position. I'm certainly 2/3 at the most. And I would say if we closed beneath that middle trough, so you can see this middle trough in here, because we're starting to obviously, we have lower peaks in place already, but starting to make a lower peaks and lower troughs pattern. So we are potentially doing something like this. How cool is this? Oops, we're going backwards there, didn't we? You get what I mean. Close beneath that trough there, and that's the second third out, and the most you'd have is a third, and then probably somewhere under the short-term trend ribbon, if close beneath that, you extricate yourself of your final third. That's how the model works. We don't get all out at once, especially on these amazing trends, but we are looking for signs that supply is coming in and taking control. Nicola asked along her theme of those energy stocks for ExxonMobil. Well, that's had a much better run than anything in Australia, so I can see why you might be thinking something's up in the US, and it's reflecting better what's happening in some of those in the energy complex. The energy complex. That's the group of futures. The complex. That's the word I could find before. That's how the subconscious works. I could buy that. It's more of a turnaround play. We've obviously got some supply up here. It's not the best chart I've seen, but if you had an affinity with the theme, I could add some risk to that, Nicola, if that's how you were inclined. CVX, which is Chevron, is the other one she wanted to look at. Not as good, but not far also from turning this long-term trend ribbon from an area of dynamic supply into dynamic demand, and with another confirmation that it is acting as demand, then it could get interesting. But again, you're pretty limited, I think, by some of that historical supply. That is 100% everybody's request. I do still want to just do, for completeness, some of these Magnificent Seven. A bit like Microsoft. I still think you're full risk position, but I think you're a bit closer probably to taking some off the table. And I'd just be watching under there, the area under there, and just be saying, well, I can't change that. Maybe, can you move that? Can I change? No, you can only do that. Anyway, you get what I mean. Let's do a Google, Alphabet. See, that one's, that's already started to turn. It's holding the long-term trend ribbon, so it's okay. But I think the next move beneath here will be telling if it occurs. If it doesn't occur, ignore what I said. So look, that's okay, but you can see there's definitely something different happening there compared to, say, a Microsoft or an Amazon. Let's look at Meta. I think there's a few issues on this chart as well, and I think I'd be managing my risk underneath here, okay, and then underneath here as well. The question is whether I think you're all out by the close back into the gap there. Let's go to Tesla. That one's changed. That's more like Apple. This trend is dead. This trend is very much dead. This is a downtrend, a well-established downtrend now. Yep. So we have the break, the retest, the fail, and we're coming down. There's an area there potentially that could provide demand, but maybe there. So I wouldn't have any risk on that one at all. I'm trying to think Magnificent Sevens here, and we've probably done enough to give you a bit of a picture, but it's not that clear-cut, synchronized growth in those big names that we have seen in the past. Okay. All right, let's leave it there. Let me remind you of the disclaimer before we go. Everything we've discussed tonight, it's just information, it's opinion occasionally, but it's not advice. You've got to do your own thing at the end of the day, and you're responsible for that. And if you consider it very carefully, you seek the help of a financial professional, it meets your objectives and needs, and you still want to do it, then by all means, knock yourself out. Because ultimately, it's you that decides what's good for you and not me. It's been a pleasure chatting with you this evening. Hopefully you enjoyed the session. I did. I'll get that recording going for you, and posted to YouTube very shortly. You get an email notifying you when it's ready. But until next week, all the best for your trading and investing. Until we catch up again, bye-bye for now.